Major alert for IQD and VND holders. Could a currency revaluation be just hours away? The buzz around a possible monetary reset if you hold Iraqi Dinar, IQD, or Vietnamese Dong, VND. What you're about to read may change the way you look at the coming hours. Rumors are swirling, leaks are surfacing, and insiders are hinting that something extraordinary may be taking place behind the closed doors of central banks and international financial institutions. What many in the revaluation community have been waiting for could finally be within reach. A currency adjustment so significant that it might not only reward long-time investors, but also shift the balance of economic power in parts of the world. While speculation about revaluations has circulated for years, the latest developments are unlike anything we've seen in the past. We are not just talking about whispers from anonymous forums or unverified messages on social media. This time, there are reports of high-level meetings, unexpected statements from central authorities, market activity that defies normal patterns, and even the brief publication of an official announcement that vanished almost as quickly as it appeared. In this article, we'll take apart every piece of this puzzle. What's been reported, what it could mean, why experts are paying attention, and what might happen if these currencies truly revalue within the next 24 to 48 hours. The background: why IQD and VND have attracted attention for years before diving into the current situation. It's worth recalling why the Iraqi Dinar and the Vietnamese Dong have been watched so closely by currency investors. The Iraqi Dinar, IQD. Iraq holds some of the largest oil reserves in the world. Yet, due to years of war, sanctions, and political instability, its currency has been held at artificially low values relative to its resource wealth. Supporters of the IQD revaluation thesis have long argued that once Iraq stabilizes and rebuilds, its currency would need to be adjusted upward to reflect its economic fundamentals. The Vietnamese Dong, VND. Vietnam has emerged as a fast-growing manufacturing hub and a major alternative to China in global supply chains. Yet its currency remains undervalued, keeping exports competitive but limiting the domestic purchasing power of its citizens. A stronger dong would signify that Vietnam has matured into a higher-level economic player, ready to reprice its currency in line with its surging growth. For years, holders of these currencies have speculated about the possibility of a dramatic upward adjustment. Most of the time, these expectations ended in disappointment. But the combination of signals now appearing has reignited belief that this may be the real deal. The reports: late-night meetings in Baghdad and Hanoi, according to multiple independent sources. Central bank officials in both Iraq and Vietnam have been holding extended late-night sessions over the past week. These are not the routine policy meetings that take place as part of normal financial governance. Instead, leaks suggest that the subject on the table has been nothing less than a recalibration of exchange rates. The fact that these discussions are happening simultaneously in Baghdad and Hanoi is noteworthy on its own. But what makes it even more significant is who else is reported to be at the table. Representatives from the International Monetary Fund, IMF, and the Bank for International Settlements, BIS. The IMF serves as the referee of global monetary policy, guiding nations through reforms, bailouts, and currency realignments. The BIS is often described as the central bank of central banks, providing a platform for coordination among the world's most powerful financial authorities. When these two players are in the room, the conversation is rarely about small tweaks. Their presence signals the potential for something far larger, an event coordinated across borders, designed to minimize shocks and align with global market dynamics. The leaked announcement that vanished, perhaps the biggest clue so far, came not from a rumor, but from a brief official publication. Late one night, a press release appeared on a central bank channel that spoke of the finalization of currency reform procedures. For veteran watchers, that phrase is extremely unusual and loaded with meaning. Central banks rarely, if ever, use such language unless a major shift is about to be enacted. The statement was taken down within an hour. But by then, screenshots had already been shared widely among analysts, investors, and insiders. The removal of the release raises even more questions. Was it an error, posted prematurely before the official green light? Was it a deliberate signal meant to reach certain stakeholders without creating full-blown panic? Or was it evidence that the final decision is still being debated, with the press release drafted in anticipation. Regardless, its timing aligns with the unusual market signals being detected elsewhere. Market movements, liquidity spikes, and platform shutdowns. In the last 48 hours, FX traders have observed irregular patterns in liquidity flows in Asian markets. Spikes in demand, widened spreads, and uncharacteristic movements suggest that large institutions are positioning themselves ahead of an event. At the same time, several private exchange platforms used by high-volume investors temporarily suspended new orders. Their official reason: system maintenance or liquidity synchronization. But veterans in the market know this is not normal. Systems across multiple platforms rarely pause in unison unless they are preparing for something major. The last time such coordinated interruptions occurred was during the 2015 currency realignment, a moment that led to dramatic overnight shifts. Many traders caught unprepared were left with devastating losses. The fact that this pattern is repeating has only heightened anticipation. Why the stakes are so high if these revaluations occur, the consequences extend far beyond the wallets of individual investors. For Iraq, a stronger dinar would give Baghdad far greater leverage in oil pricing negotiations. It would reduce dependency on the US dollar for transactions. Infrastructure projects could accelerate with increased purchasing power. Foreign direct investment would likely surge, solidifying Iraq's return to the global stage. For Vietnam, a revalued dong would acknowledge years of disciplined economic growth. Vietnamese citizens would see stronger purchasing power at home. Vietnam could attract even more foreign investment as a credible alternative to China. It would signal the country's transition from an emerging economy to a more developed growth leader. These moves would not simply be about exchange rates. They would reshape geopolitical and economic alignments in the Middle East and Southeast Asia. The global ripple effect, a sudden revaluation of IQD and VND, would not occur in isolation. The impact would spread quickly across asset classes and international markets. The US dollar could face temporary volatility as reserves are rebalanced. Some analysts suggest a slight downward pressure on dollar dominance in trade settlements. Yet paradoxically, the dollar might also see a short-term surge as investors seek a safe haven. Precious metals, gold and silver, traditionally spike during currency realignments. Investors hedge uncertainty by moving into hard assets, and this situation would be no exception. Cryptocurrencies. Holders who suddenly find themselves with windfall profits may look to diversify into Bitcoin, Ethereum, or other digital assets. Exchanges could experience liquidity surges, potentially lifting crypto prices. Global trade. Central banks worldwide would need to adjust their reserves and currency exposure, sparking a wave of portfolio rebalancing. This would not just be a story for FX traders. It would make headlines across the entire financial world. The tiered rollout theory, another possibility analysts are considering, is that the revaluation may not be implemented all at once. Instead, there could be a tiered rollout. One institutional phase. Sovereign funds, major banks, and whales with massive holdings might be given first access to preferential contract rates for a short window, perhaps 24 to 48 hours. 2. Public phase. Ordinary holders would then gain access to a broader but slightly lower rate once the initial liquidity is absorbed. Such a phased approach would make sense. It would control volatility, prevent mass chaos, and allow systems to process exchanges without overwhelming the financial infrastructure. For individual holders, however, this would mean timing is critical. Those who are prepared, knowing exactly where to exchange, what documentation is required, and what rate they are willing to accept, could benefit most. Hesitation might lead to missed opportunities. Media silence and regulatory shadows. One curious element in this unfolding story is the relative silence of mainstream media outlets. Despite unusual market movements, there has been little formal reporting. This could mean journalists do not yet have official confirmation and are waiting before publishing. Authorities have quietly requested a hold on coverage until an official statement is released. This playbook has been seen before. In 2009, during major currency interventions, public reporting lagged behind the actual events by several days. By then, insiders had already positioned themselves. If history repeats itself, ordinary investors will need to rely on alternative sources of updates. The psychology of investors. Caution versus excitement. For many holders of IQD and VND, emotions are running high. After years, sometimes more than a decade of waiting, the possibility of a revaluation feels almost surreal. Some are already mentally calculating life-changing profits. Others remain skeptical, remembering the countless false alarms of the past. The smart approach lies somewhere in between. Stay calm. Do not make decisions based on hype alone. Prepare, have your paperwork ready, and know your exchange options. Consult experts. Not all financial advisors are familiar with currency revaluations, but it's worth seeking professional input. Plan ahead, decide how to use potential proceeds, whether to pay off debts, invest, or build a safety cushion. Because if the event unfolds rapidly, there may be only a small window to act. Bigger picture. A global currency realignment. Some economists argue that what we may be witnessing is not just two isolated revaluations, but part of a broader global reset. For decades, the US dollar has dominated as the reserve currency. But shifts in global power, emerging economies rising, energy markets evolving, and geopolitical alliances shifting are challenging that dominance. If Iraq and Vietnam revalue together, under the supervision of the IMF and BIS, it could be the first step in a series of coordinated moves. Other currencies might follow. Regional blocs could pursue greater independence. Reserves could diversify further away from the dollar. In other words, this could mark the start of a new chapter in international finance. Final thoughts. Preparing for the unknown. No one can say with absolute certainty what will happen in the next 24 to 48 hours. Revaluation rumors have surfaced many times before, only to fizzle. But this time, the convergence of factors, the high-level meetings, the leaked statement, the unusual market behavior, and the suspension of exchange platforms, creates a scenario that cannot be ignored. For IQD and VND holders, the most prudent move is to prepare for both outcomes. If the revaluation occurs, be ready to act quickly and wisely. If it turns out to be another false alarm, avoid overreacting or making rash financial choices. Either way, staying informed and calm is the best strategy. Disclaimer: all content provided by IQD Global Intel is for educational and informational purposes only. We are not financial advisors and do not provide investment, trading, or banking advice. Viewers should always conduct their own research and consult with a licensed financial advisor before making any financial decisions.